So for the hogs, I'm actually going to have two chicken slides here for this end here for the hogs. I'm going to point out as far as the boneless chicken breasts. In other words, the premium product that we have for chicken. We're still at a discount compared to last year. 138 is the latest number here for March, and this is still a discount. So chicken is still 5% discounted on one of the key cuts that competes against pork, for instance, pork loins and such. So as far as this goes, I want to point out that pork has a little trouble right now on the competition end. We talked about retail prices last week on the commentary. One thing we noted here was while chicken prices at the retail level are only up 2 to 3%, we still have pork is trading up about 12% higher than last year, beef up 9 to 10% higher than last year. So chicken is one deterrent against pork having this good rally. I will point out that this is a little different there for the lower end of the chicken world, which is leg quarters in this case. They're still trading at some premiums. But on a wholesale basis, yes, this has a premium, but it's not anywhere near the wholesale premium that pork has, a good 25% over last year prices. So the only thing I want to point out for the pork end is actually the fact that chicken is still a deterrent to rising pork prices right now. This will get corrected because we have changed this production end on the chicken, and this will get corrected here in the coming weeks. But for right now, at least, we do have this kind of pork and more or less a sideways market in the big picture here because we have this chicken kind of restraining the prices. For cattle, this chart kind of tells the story of why we've had these, at least the recent run-up in prices. Certainly a good drop has always happened seasonally into mid-March in terms of production. So this is certainly why packers were scrambling for those cattle and why we had all this excitement going on here in terms of prices. However, as you guys can tell here, the next few weeks we're going to have a large buildup in supplies. And as we talked about, based on that cattle and feed report before, we're going to have an 8% higher slaughter level during summer. So we're going to have a normal run-up in prices. On top of that, they're going to be extremely high because all those placements we did back in November through January. Now the change we saw in placements here on Friday's report, which was about a 1% lower placement number for February, that's going to start impacting slaughter levels from July out. So I want to make a point here that all these numbers for the next 3 months, these are already set in stone, these are already in feedlots, and they will come out. So we should be bearish right now on cattle for June and August futures. That's not changed. We certainly still feel that way. Everybody with cattle in the feedlots should have 50% of numbers already locked up, and we certainly hope to get the remaining 50% done by the end of this month. So you should be bearish on cattle for June and August futures. And we're still using that 105 as actually a downside target. Still about another $6 to go on the downside. If you want to be bullish, which you should for the long term, certainly be bullish on the October, December, all those far deferred contracts where we are going to see lower placements in the coming months. So I want to make a point for the guys who don't have any cattle hedged yet, certainly get something on for all those numbers coming out between now and July. Very important for us. One thing which is interesting, and we've seen this chart a few times in the past couple of years. There have been phases where cattle have traded right next to the stock market. Kind of interesting that this strange relationship, which wasn't even watched for months, kind of back on here in the past week and a half. So I'm not really into this chart itself here, but just want to point out that in the past month or week and a half, there's been a strong correlation with the stock market. So we are going to have to go back to watching this on a day-to-day basis here. And last chart, as far as speculative positions, we talked about this chart in the last 2 months or 2 weeks here. We got this spread done, buy into December, sell into June. I believe 517 is what we have taken care of on the charts or on the advisory report here. Still looks like it's working just fine. So as once again here, because we're bearish to June with all those placements which are coming due in the next couple months, bearish to June, and we are long to December because we like this from a long-term perspective, where there will be no placements hitting those markets here. So we still like this here.